do have life insurance, that's only one step toward your estate planning and getting your finances in order. The other step is every year or every 2 years at least, you should be constantly reviewing it, taking into consideration any changes that have taken place in your life. Maybe you've had a child since you first got that policy, and now you need to update it. And add that child as a beneficiary or to a trust. For instance, I had a couple of instances that were brought to my attention where a husband passed away and the wife thought that she was going to get monies from various life insurance policies that she was aware of, and the one that he had at his job, actually he had it since he started, and he had worked there for many years before they got married. So initially he had his mother down as a beneficiary and never thought to update it, and they were married for over 20 years. And he never remembered to go back and had a thought about updating beneficiaries. And when he passed, the family got it. The mother at the time was suffering from Alzheimer's. So it became a big legal battle that the attorneys ended up eating up a third of whatever was finally awarded to her. It's important that you, when you're getting life insurance, that you want to seriously consider what are some of the expenses that you would want taken care of in this policy. It may mean that you need a $500,000 or $600,000 policy, and that a $50,000 policy is just not going to do it. I just met with a family when they came in to get their taxes done. She was so prepared. She had her list of questions. And she had looked into life insurance because she completely forgot that we offer that. And her insurance agent, who actually provides her car insurance, offered her life insurance, and she was very emotional at the time. She was still pregnant at the time and having a baby, and it was just a lot of emotions. Like, oh, I just want to make sure that if something happens, they're going to be taken care of. Well, she was sold a $50,000 whole life policy, and the family, the cost of that policy definitely is much higher than a basic term life insurance policy that for their particular situation would have been more ideal, and it would have given them much more coverage than just $50,000, because as I explained to them, $50,000 is going to get you through the first year of expenses maybe, and then what happens after that? What happens to if you're planning for your child to go to college, or the parent that's left behind doesn't make enough in income to continue to support them.